I want to start this briefing today by asking you, the listener, to visualize a scenario.
Okay.
It's going to feel impossible, but just stay with me. Let's rewind the clock. 5 years ago,
Right.
you walk into a boardroom at Goldman Sachs or, maybe the New York Stock Exchange, and you look these masters of the universe right in the eye.
The guys who control trillions of dollars.
Exactly. Trillions. And you tell them, hey, in the very near future, crypto, that thing you are currently calling a scam and a pet rock.
A pet rock. Yeah, that was the phrase.
Right. You tell them that pet rock is going to be the absolute center of your universe.
They would have laughed you out of the building. I mean, security would have been escorting you out before you even finished the sentence.
Oh, absolutely. But then you hit them with the real kicker.
Uh-huh.
You tell them not only will it be the center of your universe, but you, the CEO of Goldman Sachs, you are going to be the one traveling down to Florida to kiss the ring of the people building it.
Yeah, that would have been diagnosed as a literal delusion back then. The establishment view was that crypto was for criminals, hackers, maybe some very naive retail investors. It was an annoyance to them, not a partner.
And yet, here we are. Fast forward to the date on the intelligence file we are breaking down today, February 19th, 2026.
Mar-a-Lago.
The scene is Mar-a-Lago and the guest list. Look, we're not talking about the usual tech bros or crypto anarchists here. We're talking David Solomon, the CEO of Goldman Sachs. We're talking the heads of the NYSE, the chairman of the CFTC, all of them, gathering at a private summit hosted by World Liberty Financial.
Which, as the world obviously knows now, is the crypto platform founded and heavily championed by the Trump family.
Right. Now, as a family office, you are probably skimming the headlines in the Wall Street Journal, and to you, this just looks like another high-powered tech conference.
Business as usual.
Just business as usual. But looking at our sources today and the specific intelligence we've pulled for this deep dive, the framing is completely different.
Completely.
You're arguing this wasn't a conference at all.
No, it wasn't a conference. It was a surrender.
A surrender.
That is the only accurate way to read the power dynamics in that room. What we are doing today is essentially a red team analysis of this event.
Okay.
Because we aren't interested in the press releases, we don't care about the smiling photo ops, we are looking at the leverage.
Right. But surrender is a really strong word when you're talking about the biggest banks in the world. They don't surrender to anybody.
They do when the math changes.
Okay.
Look, this deep dive is a forensic look at how a revenge story basically birthed a new financial system. We need to decode the USD1 stablecoin.
Right, the stablecoin.
Because once you understand the actual geopolitical money flows backing that coin, you realize this isn't just about Bitcoin anymore.
It's way bigger.
It's about a merger. The White House, Wall Street, and the blockchain are actively fusing into a single operating system.
Man, that is a massive claim to make to our listeners. So let's back it up. Let's start with the why. How do we actually get from crypto is for criminals to the CEO of Goldman Sachs sitting in a private dining room at Mar-a-Lago? Because historically, these two worlds, traditional finance and decentralized crypto, they're like oil and water.
They don't mix.
They don't mix at all.
To understand the merger, you really have to understand the trauma that caused it in the first place.
The trauma.
Yeah. We have to go back to what the Intel calls the Origin Code of World Liberty Financial, or WLFI.
Okay.
This project didn't start because the founders suddenly fell in love with the elegance of blockchain coding.
Right.
They didn't have some sudden libertarian philosophical awakening about separating money and state.
So it wasn't about innovation.
No. It started as a strictly defensive measure. You have to look at the timeline in our briefing, specifically around 2021.
Right. This was the post-presidency fallout period for the Trump organization.
Exactly. The Trump empire faced a massive coordinated freeze from traditional institutions.
The debanking.
The debanking narrative. You hear this a lot in these circles now. Lenders pulled back. Accounts were heavily scrutinized or just closed. And the family realized a terrifying truth about the legacy financial system.
Which is?
It is entirely centralized.
And centralization implies a choke point.
Always.
If there is a center, there is someone standing there who can turn it off.
Precisely. Look at it this way. If your money sits in a ledger owned by a bank, that bank has a compliance officer.
Right.
And that compliance officer answers to regulators or public pressure or internal risk committees. If they suddenly decide you are high risk, they just turn off the tap.
It's just a keystroke.
Literally a keystroke. It doesn't matter if you're a billionaire. If you can't move your money, you are totally paralyzed.
That's a heavy realization to have. The idea that you can be canceled financially.
Yes.
It effectively means the money isn't really yours. It's just an IOU from a bank that can be revoked whenever they feel like it.
Right. And for a family that operates heavily on real estate leverage and cash flow, that is an intolerable risk.
You can't survive that.
Eric Trump has been very explicit about this. He stated that this specific trauma was the catalyst for the whole thing.
Really?
Yeah. They looked at decentralized finance DeFi not as a way to bank the unbanked in that sort of altruistic sense of helping people in developing nations.
Right. They weren't trying to help the little guy in El Salvador buy a cup of coffee.
Not at all. They wanted to build a fortress.
A fortress.
They realized that on the blockchain, specifically with smart contracts, there is no compliance officer.
Just the code?
There is only code. If you hold the private keys, nobody can freeze your assets. Nobody can stop a transaction.
I want to make sure we really nail this point for the family offices listening. When you say smart contracts, you basically need a vending machine, right?
Yes.
You put the input in, you get the output. No human can stand there and say, hey, I don't like your politics, so no soda for you.
Yeah. That is the perfect analogy. It is totally permissionless. They utilized DeFi to build their own table where they made the rules, or rather, where the rules were set in immutable code and couldn't be changed by some risk committee meeting in New York.
Wow.
And the irony, of course, is that by 2026, they had built a table so big and they controlled so much liquidity that the very bankers who tried to freeze them out had absolutely no choice but to come down and sit at it.
That brings us right back to the surrender.
Yep.
You build your own casino, and eventually the old house has to come play by your rules because that's where all high rollers are.
Exactly.
But let's play devil's advocate here for a second. David Solomon, Goldman Sachs.
Sure.
These guys aren't sentimental. They don't go to Florida just be nice.
Yeah.
And they certainly don't fly down there just to admit they were wrong about the pet Ross.
No, they don't.
Why did they actually capitulate? Is the crypto market really that big that a giant like Goldman Sachs desperately needs it?
It is now. It comes down to profit, pure and simple. We have to strip away the politics here and just look at the raw incentives.
Okay.
Wall Street follows liquidity. By 2026, with a decidedly pro-crypto administration sitting in the White House, the regulatory dam had totally broken.
What does that actually mean in practice, though?
Yeah.
The regulatory dam breaking.
It means the SEC and the CFTC stopped suing crypto companies and started rubber stamping them. Suddenly, you have an absolute tsunami of activity. You have massive IPOs for crypto companies. You have huge mergers and acquisitions. You have real-world corporate debt issuance happening on-chain.
And Wall Street lives on the fees from that stuff.
Exactly.
They are the ultimate toll collectors.
Goldman Sachs, JP Morgan, they are middlemen at their core. They make their money when money moves or when big deals happen. If all that capital starts moving on a blockchain where they aren't the gatekeepers, they die.
Right.
They lose billions in fees.
So they looked at WLFI and realized we can't beat them, so we need to broker their deals.
They need the deal flow. But there is a really specific detail in the intel briefing regarding Solomon that I found fascinating, the Witkoff connection.
Yeah, I saw that name in the file, Steve Witkoff. He's a real estate guy, right?
Right. Because it wasn't just a cold call from WLFI to David Solomon. That's not how the real world works. It's relational.
Always.
The briefing mentions that Solomon attended largely due to a phone call from the Witkoff family. These are massive real estate tycoons, very long-time Trump allies.
But why does the CEO of Goldman Sachs care about a phone call from a real estate developer?
Because the Witkoffs are major clients of Goldman Sachs.
Of course.
When you have a client who generates massive 8-figure fees for your bank, and that client says, hey, David, you need to be in Florida on Tuesday to meet with the president's crypto team.
You get on the jet.
You get on the jet.
So it's the network effect in action. It's not just, hey, crypto's cool now. It's my biggest clients are demanding I care about crypto.
It's the ring-kissing moment. When your biggest institutional clients and the political establishment totally align on a technology, you stop calling it a pet rock real fast.
Yeah.
Suddenly, it looks a lot like a diamond. Solomon didn't suddenly become a true believer in the ethos of decentralization.
Right.
He became a believer in where the wind was blowing.
Okay, so the table is set. The bankers have officially surrendered. They are in the room.
Yep.
But what are they actually serving for dinner? Because the intel here isn't just about the guest list. It's about the product. Let's talk about USD1.
Yes. This is where the story shifts from just a corporate Wall Street drama to a full-blown geopolitical thriller.
I love it.
World Liberty Financial's flagship product is USD1. It's a stablecoin.
Let's clarify that real quick for any listeners who might be a bit rusty on the mechanics.
Mhm.
A stablecoin is basically just a cryptocurrency that is pegged one-to-one with a fiat currency, right?
Okay.
You give them a real dollar, they give you a digital token worth $1 on the blockchain.
That's the mechanism. It's a digital dollar. But here is the critical nuance you have to understand. It is a private digital dollar.
Private.
Yes. And the stats in our file are just staggering. Despite what the sources call a bear market in other areas of tech, the circulation of USD1 has exploded past $5 billion.
$5 billion.
Yeah.
That's real money. That's not a cute little science experiment anymore.
It is a systemic player now, and we have to apply the forensic lens here. Think about the business model. This is the part most retail observers completely miss. How does a stablecoin issuer actually make money?
Well, usually they take the cash you give them, that $5 billion, and they don't just put it in a mattress, they stick it in U.S. Treasury bills.
Exactly. They buy government debt. And
Well,
right now, let's say treasuries are paying, what, 4 or 5%?
So wait, 5% on $5 billion.
Do the math.
That is $250 million a year.
In pure free cash flow. For doing nothing but sitting on the money. Now, look at the conflict of interest here. You have the family of a sitting United States president issuing a private currency.
Which effectively competes with the Federal Reserve, doesn't it?
Mm-hmm.
Or at least it competes with the vision of a government-run digital dollar, CBDCs.
It occupies the exact same space, yes. If you are using USD1 to transact globally, you are using a product that generates massive private profit for a company owned by the political elite, rather than using a government-issued instrument.
Right.
If I'm the Federal Reserve, I'm looking at this thinking, wait a minute, you guys are essentially printing your own money and you get to keep all the interest.
That sounds, I mean, honestly, it sounds illegal. Or at least like something that would get shut down immediately in literally any other administration.
You'd think so.
How do they defend that? What is the counter-argument when the regulators come knocking?
Well, they have a very, very clever narrative. It's what the briefing calls the sovereign shield defense.
The sovereign shield. That sounds like something out of a Marvel movie. How does that actually work?
It goes exactly like this. We just established that to make a stablecoin stable, you have to back it with safe assets, right?
Right, the Treasury.
You are buying U.S. Treasury bonds. So WLFI argues that by expanding USD1 to billions or eventually trillions of dollars, they are creating a massive, bottomless new buyer for U.S. government debt.
Okay, I see where this is going. They are saying, hey, the U.S. government has a massive debt problem. Nobody wants to buy our bonds. We are finding new people to buy that debt.
Exactly. They claim that they are forcing the global crypto market, and this includes traders in potentially hostile nations, people in China or Russia who use stablecoins for daily trade. They are forcing them to indirectly fund the U.S. national debt just by holding this coin.
Wow.
It's a brilliant narrative flip. They frame the conflict of interest as a patriotic service.
Right.
They say we are protecting the dollar's global hegemony by modernizing it.
It's the ultimate have your cake and eat it too. They get all the profits from the stablecoin, the hundreds of millions in interest. But they wrap the whole scheme in the American flag. Hey, we aren't getting rich. We're saving the dollar.
And it makes them completely indispensable to the Treasury.
Because if you shut them down,
If you shut down USD1, you suddenly lose a buyer for billions in U.S. debt. You actively hurt the U.S. economy. So they have completely integrated themselves into the national security architecture.
that is incredibly shrewd.
Yeah.
But there is a twist in the intel data here that complicates this whole patriotic narrative significantly.
The geopolitical twist. Yeah, I saw you circle this multiple times in the notes.
I had to reread it 3 times.
Yeah?
Because if the core argument is American sovereignty, this next piece of data seems to contradict that directly.
This is the part that usually gets buried in the mainstream tech reporting. We have to look at the funding. Who is actually paying for the infrastructure behind this quote-unquote American digital dollar?
You always have to follow the money.
Always. In late 2025, according to our intelligence briefing, World Liberty Financial sold a massive equity stake, $500 million.
$500 million.
$500 million to a venture fund. But not just any Silicon Valley fund. This fund is controlled by the National Security Advisor of the United Arab Emirates.
The UAE. So we're talking Middle Eastern sovereign wealth.
Precisely. And this changes the picture entirely. We aren't just looking at Wall Street versus crypto anymore.
No.
We are looking at a 3-way merger. State power through the White House connection, foreign sovereign wealth through the UAE injection, and private blockchain enterprise.
That is a wild, wild combination.
Yeah.
You have a private company linked directly to the president, selling equity to a foreign intelligence officials fund to build the rails for a digital U.S. dollar.
And that is exactly why we call this the new oligarchy. The lines have blurred completely. If you are a purist who believed crypto was about separating money from the state.
Ideally, yes. That was the original cypherpunk dream of Bitcoin, right?
Mm-hmm.
Separation of money and state, no kings, no rulers, code is law.
This is the exact opposite. This isn't separation. This is total integration. The UAE isn't just investing for a financial return here.
Right.
They are buying a seat at the table of the future financial infrastructure of the United States.
It really challenges the whole idea of what American infrastructure even means in a digital age. If the underlying code is owned by a global consortium, does the flag printed on the digital coin actually matter?
That's the billion-dollar question.
Yeah.
And it raises massive national security concerns about leverage. If a foreign sovereign power owns a significant stake in the rails of your digital currency, do they have influence over how it's used?
Can they see the data?
Exactly. Can they see the data? Can they exert pressure on who gets frozen out next?
Imagine if there's a diplomatic spat. Can the UAE pull their funding? Can they squeeze the liquidity of the U.S. dollar?
These are the exact questions a red team analyst would be screaming about in a classified briefing right now. You have basically outsourced the plumbing of your financial system to a foreign partner.
It feels like we've moved way past the era of innovation. We're fully in the era of consolidation. The big fish are eating the little fish, and the biggest fish of all are the ones with raw political power.
It is the classic cycle of revolution. Look at history. First, you have the rebels, the cypherpunks, the libertarians in their garages. They build the tech.
Right.
Then the establishment fights it. They call it a pet rock. But eventually, the establishment realizes the tech is incredibly useful for control and profit, so they don't destroy it.
They acquire it.
They acquire it. They co-opt it completely.
Which brings us right back to the room at Mar-a-Lago. That handshake between the crypto titans and the Goldman Sachs CEO, it wasn't a peace treaty. It was a merger agreement.
Correct. And for you, the listener acting as our family office persona today, this requires a total rethink of your investment strategy. You cannot look at this market with the eyes of 2020 anymore.
It's a different game.
The anti-establishment myth is totally dead. Crypto is now the operating system for the geopolitical elite.
So let's get actionable here for the family offices tuning in. We've painted a picture of a world where the big banks, the politicians, and the foreign sovereign funds are all in bed together on the blockchain. What does that mean for the capital allocator trying to navigate this? If the game is rigged, or at least if the rules are being rewritten in private dining rooms, what's the actual move?
The actionable insight here is about distinguishing between the casino and the vault.
Okay, I like that framework. Break that down. What's the casino?
The casino is this entire layer we've been discussing today.
Mm-hmm.
The private tokens, the IPOs Wall Street is chasing, the highly centralized stablecoins like USD1.
Right.
That is where the elites are playing their games, taking their massive fees, and leveraging their political connections. No, there is money to be made there. Sure, you can absolutely ride the wave.
But there's a catch.
But there is massive counterparty risk because it's controlled by a centralized few. It can be sanctioned, it can be seized, it can be diluted at will.
Just like the traditional barking system they supposedly disrupted.
Exactly the same.
And the vault.
The vault is the base layer. The assets that cannot be printed by a private company or debased by a political backroom deal. We are talking about neutral base layer protocols like Bitcoin.
So you're making a very hard distinction between crypto, which is this corporate political industry, and Bitcoin.
In its architecture, yes, absolutely. Bitcoin doesn't have a CEO you can summon to Mar-a-Lago.
Right.
It doesn't have a marketing department to sell a $500 million stake to the UAE. It remains the only truly neutral asset in this entire ecosystem.
So the strategy for the listener is play in the casino if you want to capture some upside, but make sure you keep your actual wealth in the vault.
The advice from the intelligence briefing is clear. Watch the physical infrastructure. Watch the energy layer. Watch the assets that exist outside of these new digital walls being built by the banks and the politicians.
That makes a lot of sense.
If WLFI and Goldman Sachs are building a walled garden, you want to make sure you hold a gate key to the outside world.
It's fascinating. We started this deep dive with a story about revenge, about being locked out of the system in 2021. And it ends with the exact people who are locked out building a brand new system. One that might be just as exclusive, just as centralized, but simply with different owners.
History rarely repeats, but it often rhymes. We are witnessing the birth of a new financial aristocracy in real time. They use the language of liberty and decentralization, but the actual architecture is entirely about control and profit flow.
And foreign influence. We can't forget the UAE's half-billion-dollar ticket to the show. That money buys real influence over American rails. Which leaves me with an thought for you, a listener, to mull over.
Go for it.
If the underlying code dictating the flow of the digital dollar is shaped by foreign sovereign wealth and brokered by Wall Street middlemen who really owns the future of American finance, it's a brave new world out there.
It is, and it requires a completely new way of thinking to survive it.
Thanks for guiding us through the fog on this one. Any final words for the family offices before we sign off?
The rebellion has been acquired by the empire. Position your capital outside the new digital walls.